Well, it's no longer morning, but it's got to be morning somewhere. This is Mornings with Michael for information and educational purposes only. Welcome to the weekend. Hope everyone has had a wonderful weekend, spent some good time with family. But I'm just going to share our screen first. We're going to look at, we're not going to look at our PowerPoint quite yet. Let me reshare. Share screen. We're going to go to the S&P 500 heat map first. Here's where we ended off Friday. Got a little bit of a bounce. It was in spirit a follow through day. Take a look more at that. But we got mixed signals coming up against our major moving trend lines, 50-day and 20-day moving averages. Usually things turn south when they hit those. Once they've gone below them, and that's where we're at. All the tech issues moved up quite strongly. Healthcare, except for Lilly, moved up. Amazon and consumers, cyclical, industrials, real estate, energy was kind of flat. Basic materials, utilities. So you can see most things were up for the day. You don't want to worry about how things shake out. You just share a little chart here. And we'll take a quick look at the indices and then move on. Here's our example. If you spend a lifetime building up your wealth, you don't want to worry about like 2008, where you dropped 54% and you don't have enough time to earn back that money. This is a great example of where to place it. You can put in index annuity. You can still invest in the markets, but if the markets go down, you don't lose any money. Goes up a step, does not come down, goes up another step, doesn't come down. And currently, some of these annuities are offering bonuses of 30 to 45%. So you put in 100,000, now you have 145,000. Plus, you can, through index investing, invest in the S&P 500, NASDAQ, or global indexes. And as you can see, it beats index investing by about 5% per year. This is the index investing, bobs and weaves with the markets. If you want to learn more about that, we've had a number of people who have moved into this area and they're quite happy with it. So there we go with that. Let's go to our screens. Where did our screen go? There it is. Not quite past it. Well, MicroStrategy, I believe, is going to be up some more on Monday if things hold. And let's go to the dollar index. Dollar fell quite significantly, fell to its 200-day moving average. Silver got a little bit of a bounce, was down 0.5%. Gold, which has been strong, pulled back a little bit. It was pretty flat for the day. Copper issues, gap up in Arrow Copper, closed near its low, nearly up 2% for the day. Southern Copper bouncing off of the 10-day moving average. Freeport McMoran had a really nice move. Volume wasn't as strong as a pullback, but that is a nice move off the 20-day moving average. Volley, as we continue on our mining issues, Volley, it looks like now has set up a bottoming base. It's above its 50-day moving average, had this really low area right here, and then it bounced, got back close to where the major price support had been, and it's been continuing to move up. 0.72 BHP. Wondering if this isn't doing the same thing. We may have a double bottom here. Got a pretty nice move on Thursday and follow up on Friday, up over 1.22%. Finally, we go to Rio. Rio got a nice move, pretty good volume over here, up nearly 1%. So let us go to our crypto. I have those charts ready. So here is Bitcoin. This is a 1-day average. We could take the 5-day, just take a look at where it's heading. See, we had a little bit of a pullback. I believe it was on Friday. It had gone up to 64,400, pulled back to 63, maybe 63,700, and now it's bouncing above 64,000. Where the markets closed on Friday, it was in right around 63 something. So that is what is happening there. Let's go back to our charts. Ethereum is bouncing similarly. It went from 2,900 to a little over 3,100. So let's look at where we ended. Here's where we ended on the bond yields. Got a strong pullback of 1.55%. This is why the stocks kind of rallied on Friday and nearly off 2% on the 20-year yield. If this yield rallies, it's going to kill any kind of rally on the stock market. So that's the story there. And now let's go to our PowerPoint. Share our screen. Start with the word of the day. Word of the day is Précis. After reading the Précis of the required textbook, I decided that I didn't want to take the course. Précis, a summary or abstract of a text or speech. Before you put pen to paper, it's helpful to make a précis to guide your writing. So that's our word of the day. See if you can use that or add that to your vocabulary in some way. So as we continue on, Warren Buffett says taxes may have to rise to offset widening U.S. tax deficits. Yes, this is becoming an alarming issue. A number of financial people are starting to raise. IMF sounds the alarm on ballooning U.S. national debt. Something will have to give. This is, you could Google this if you want to read more about the article. These people in Washington don't really care about our pocketbooks. All they care about is spending and throwing money overseas, it apparently looks like. JP Morgan Chase and Bank of America suffer, what is that, 4.5 trillion? That, no, 4.5 billion in losses as unrecoverable debt soars. The dominoes are beginning to fall. Two largest banks in the US are declaring a loss of 4.5 billion in debts that customers are unable to pay due to inflation. Charge-offs, which are debts that the bank does not expect to receive, hit 2 billion in the first quarter of this year, reports Reuters. And here we go, $10 billion. A bank shut down by the US regulators in first bank failure of 2024. This bank was merged with another bank. They bought up the assets. This is Republic First Bank, I believe it is. $8 billion in assets and $4 billion in customer deposits. Well, talking about taxes, this is a public debt for every American. Like Warren Buffett says, taxes are going to raise, and how much will it cost? Share of debt for a child born in 2024 is $82,590. And by the time he's 18, this will raise to almost $144,000. And by the time he reaches 30, he or she, it'll raise to almost $210,000. This is just amazing. Right now, public repayment of debt is outstripping military spending. And this is a forum kind of looking at US employment rate has risen. Beat estimates. US employment rate rose to 3.9% from 3.8%. Non-farm employment was supposed to be 238,000, came in at only 175,000. Average hours earnings was supposed to come in at 0.3, and it only came in at 0.2. So what happens to meet that gap? Here's the Chicago PMI, screams stagflation, as this thing is just jetting down. Manufacturing, anything below 50 kind of signals a recession. And when inflation cannot be brought under control, it becomes stagflation, which we experienced in the 1970s. So let's take a closer look at the market. This was the first day of an attempted rally over here. See, it has moved up, didn't quite get the proper volume to be called a follow-through day. Follow-through day is anything after 4 days. Sometimes it's 4 to 7 days, and sometimes it's longer than 7 days. So let's take a look. 2006 follow-through day. Day of the first attempted rally right here. Day 4 of attempted rally, actually undercut. And it took until the 21st day till we got a follow-through day. See, look at over here. This would have been the first day. Tried to rally. And if you had bought here, you would have lost a lot of money because it just rolled right over. So this is the importance of following rules and finding out what big professional money managers are doing with the money. Here's the NASDAQ in 2003, kind of looking at this, see if it compares to what we're going through right now. It had a 6.3% sell-off here, had the 3 waves down, which we had earlier. And then in November, we had the follow-through day. We had a pullback 6.3%, and then it rose 28%, and then it had a 7.6% pullback. Continued to raise, and then it had another 6.8% pullback, went up some more, 6.4% pullback, went up again, a 5.7% pullback, and then it really took off, 55% roaring market, and then a pullback of close to 12%. So this is where we are right now, pulling back, and we'll just have to see how far it goes. This is a NASDAQ advanced decline. Ticker symbol is GMIAB. As you can tell, it is still declining. The trend is facing down. This little pink red line, and the blue line is the moving average. On to our next slide. This is the NASDAQ. Here's a follow through day on November 1st. See the big move here. This is the advanced decline line. I believe this is against the S&P 500. And we've got a gap up over here. Just kind of is following the 10-day moving average. This is the first pullback. And pull back to 14,477. Kind of bounce, pull back to the 20-day moving average, and then bounce again. Here, pulled back to the 20 again. Right over here, February is a gap up. We've got a line right going here to the bottom of where it gapped up to. And this 21-day average is what needs to get across. And then we need to get across the 50-day. Like I've said before, these moving averages can act as support until they're broken. And when they're broken, they act as resistance. And a lot of times things are turned away from the moving averages when they get close. So that's a risk of jumping in too early. Funds focused on quality stocks that are boring. Getting away from the high multiple and high volatility tech companies. Quality of factor targets companies that are in financially healthy positions. And you can look this up as QUAL. It's an ETF. And this is kind of the returns it's gotten over here. The shares of the MSCI USA Quality Factor ETF has a rock bottom 0.15% exposure ratio. This makes it one of the most cost-effective ways to add this to your portfolio. You need some calm, either ETFs or stocks. Not everything can be jumping up 20, 30% over a quarter, because they can go down as much and can lead to a heart attack in your portfolio. So this is a 1-year chart of the S&P 500. I talked about this earlier in some of my shows. This is the first kind of shot across the bow. I'm not sure if this was on a Thursday. Then it came up here on lower volume. And this is actually looks like a hanging man candle. And sure enough, a hanging man leads to a sell-off. Didn't happen immediately, but then it came. And then here's a big sell-off right here. Bearish engulfing. Tried to pop up, only went up halfway and then rolled over some more. And now here's the 20 and 50-day averages. I believe this blue line is 20-day. And this is kind of what the markets are putting their heads up against. This is a 1-year, looking back in history. What happened the last time? Got under these moving averages, trended down, tried to come up above here, was turned away and trended down again. So the first time, so this is a 1 wave down, came up here, 2nd wave down, 3 waves down before it was able to come through again. Right around November 1st. This is where we're trending, pulling quite under the moving averages. So this is a first wave down. Are we going to have 3 waves down again? Does this get turned away? So we got a hinge here. Looks like it's getting ready, might be getting ready to hinge on the CCI. This is on a 1-year chart. Now this is the Dow Jones Industrial Average. In the gray is before the market opens. So it looks like professional traders were pushing this up to kind of invite people to buy. So it had a peak right over here, and then the rest of the day, it sold off. Tried to come back up, but it never got to the area in pre-market. So this is the Dow. Call this a spinning top, almost a hanging man. It's kind of a bearish signal, even though it popped above the moving average. I think this is going to come down. Just need the stochastics and the CCI to get a hook that will confirm that. But got bearish volume here. And it was higher than the previous day that was bullish. So that is what we got there. Look at the IWM, small capitalization stocks. We got a little bit more, once we hit our heads up here and came back down. It's a little different symbol. Kind of looks like might be a bearish engulfing where it closed down here, closed lower than it opened for the day. So that is that. Now we move over to the NASDAQ. Looks like a spinning top over here or a hanging man. Although we do have green here, it's a possibility it could go move higher. And both the stochastics and CCI are heading up. We had a hook down here, but now it's come back up here. So possibly Monday and Tuesday it could move back up, but this is resistance right now. Right before it had been support. You see S&P 500. Similarly, it didn't quite get up here. Tried to get up here and that was turned away. Looks like a spinning top. Are these, this is CCI, it looks to be at the overbought territory right here. And is the stochastics ready to start a hook here? It is slightly green, so it is possible that we could have some continued buying on Monday and Tuesday before it starts to turn. So what are our targets? We got to bring up our targets here. A little handy, what we used to call a cell phone, smartphone. Dow target is 379.61. Small caps target is 198.95 and then a pullback to 194.59. So we think it's going to go up slightly and then pulling back. The NASDAQ, the target is 425.73 and the S&P 500 is 501.22. Now we move on to the VIX. We got two gaps right here on the VIX. Not sure if it's going to pull back to, it's a possibility it could pull back to fill this gap. Portion of it has been filled, but it hasn't come down to the bottom. And then I think it's going to surge to fill this other gap. And long-term target is at 1838. Right now it's right around 1348. So that is the story there. Saw this online this morning. Bitcoin on track to explode by over 1,500%, according to on-chain analyst Willy Woo. And what's his timeline? His timeline is pretty extended, 11 years. So it is not a quick turnaround. And then here's something else we're going to look at. As I've been diving into the Nicholas Darvas book, he tracked a fundamental analysis, trying to get news about earnings, and what he found, technical analysis worked better than anything else. This is a Nicholas Darvas box. He said stocks will oscillate once it's come all the way up here, comes into this box and it oscillates. You just need to find out what the diameters of your box are and just let it oscillate. And see here, it cut under. So this is where he would have been selling as it cut under dimensions of the box. And it came back up here. So this would be a breakout right in here. Slight pullback, keeps trending higher. I guess this could have been a box right here. And it breaks out of that area and comes into this box and then oscillates back and forth. Now, if you don't have any much oscillation, potential for it breaking out of this area is very small. So you want something to oscillate after it breaks out. And this would, when it gets up to this level, this would be a potential to add on to your profitable security. It oscillates some more, and then it breaks out. So that is what the Darvas box method is all about. Let's go take a look at our charts here. It's a question about Bitcoin. So Bitcoin went all the way up here. Where would you put the box? So this would be the bottom of the box. Draw that line. Right over there. So you can see Bitcoin is oscillating within this box. Now what you want to do, see this tight little area right here? This is the point you want to buy. And then you just let it ride right up here. And if your buy point is down here, you can comfortably ride this box. It bounces within that area. But when it breaks out of this area, this is where you want to have your stop, slightly below the box. Because you don't want to go into this area, you just have no idea how low it can go. And now it's kind of filling this gap area, and it's moving up here. That little news, I guess, is reassured where the Federal Reserve, while they're not lowering interest rates, are similar to quantitative easing. That statement reassured stock traders that Friday brought the interest rates down. So we'll see how their inflation fighting continues to be. But as there becomes more of a risk-on atmosphere, Bitcoin can get back to its levels, but you need to watch it closely. So that is where we are. Again, take a look at Ethereum. So Ethereum is writing here. They had the gap up here. They had another gap here. So looks like this would have been the area of the box. And right over here is a gap down, would have been a place to get out. it may have tempted you to come back in here, but then it sold right off. See this 20-day moving average, once it gets below there, that may be a good place to sell. See, once it gets below there, it tries to come up here again, and then it sells off again. Had one day where it went above it, but then it sold off. It came down in this area, and it usually takes 2 to 3 times to break through on this type of resistance. So let's go back to Bitcoin. What happens when it breaks through the 20? Broke through here, popped above it, but then it fell right below it again. Popped above it for one day, gave you another chance to sell, take your profits, and it came down. So it came down once, didn't really stay above it. So that'd be the first try. Here's the second try. Here's the third try. It's turned away again. And now we'll just see if on the fourth try, it can break through this area. But as you can see, 20-day moving average is trending down, and you just need to be careful. Let's go over to MicroStrategy. They just had a big seminar and getting businesses into producing products for Bitcoin on the blockchain. So we had a lot of what happens when a lot of institutions get into these things. A lot of times their timing is not good and it'll just roll over. And that's what happened here. Came below its 20-day moving average here, tried to get above it. Was soon turned away when it bumped its head on the 10-day. Fell through the 50-day. Once again, tried to break through, turned away, got above its declining 10-day, turned away again, and now it looks like got some buying. We'll have to see on Monday where the chart looks, but that's kind of the story there. What are some issues that are doing well? CEG, Constellation Energy, I believe this is a recent IPO. It IPO'd on January 31st, 2 years ago. It's remaining above the 20-day moving average. Had a big move on Friday. Earnings are in 4 days. That's the thing to watch out for. Pretty good volume here. We'll see if it can get into this breakout area. But once again, we could draw the Nicholas Darvas box. So it's oscillating within this box. It's just held right there. And you need to hold your firepower until it breaks out of this box. And even if it breaks out of this box, it may pull back, may develop a handle. Could be something like this. Zigzag along like this. Throw out some weak holders and then move powerfully up there. So a lot of it may be determined on earnings. The big winner in the oil and gas is TDW, Tidewater. Looks like they've broken through this box area. Let's look back in history. Similar areas. This was a pretty big box. Guess the line doesn't want to come along with me. So that's your box right there. It's just been oscillating within that box. Tried to break out here, couldn't make it. Pulled back into the middle of the box, but is holding above the 50-day moving average right here. Pulls back to the 50-day again, holds right along it. And then right over here, boom, it breaks out. And then it starts trending strongly. And then it comes back into this box and starts oscillating back and forth again. Where it pops up here in earnings, 287% increase in earnings. Of the big cap tech. Google had a cup with handle over here, oscillating within this box. And it just kept oscillating and oscillating. Tried to break out, had some bad news over here, came back, got turned away, tried it again, got turned away again, came up here, top edge of the box, got turned away again, and then finally it broke through. What happened here? It crashed and it fell right into the box again. So what happens if we extend this? Sometimes that will happen. Now, you want to have something that works 80 to 85% of the time. It broke out of the box on a strong move here. Guess that's where you would buy. And it fell the following day, bounced back, fell again, and then it is taken off here. So that is with Google. Take a look at NVIDIA. So it was down here in this box, oscillating back and forth. So had a pretty deep entry here, but as you see, it never got close to that area again. It's just held along the 50-day moving average, broke out, rode the 10-day moving average all the way up here, a couple of days down to its 20-day, then it bounced right back. And now we got a high of 974, and it's just oscillating into this box. Undercut over here. It's what you call a shakeout. It bounces back, and now it's probably going to oscillate back and forth for a while until it gets its earnings. It had some Taiwan semiconductor. Was a positive for it when their earnings came out. Earnings were up 4%, but super microcomputer really hurt. So that was kind of a view of thinking what may be happening to NVIDIA. And AMD is a bad data point as well. Intel, positive data point was Amazon. Microsoft, and Google. And then a negative was Facebook Meta. So that's why as they get closer to the earnings, we'll see if NVIDIA can break out of that box formation that they have going back and forth. We'll take a look at a couple of more. Take a look at Twist. I believe they have a data center. Twist bioscience synthesis platform to industrialize the engineering of biology. Had a big move here, but really they're still in this box area. See this bottom of the gap up here. Oh, it did look like it may have broken out on Friday on this move. Earnings came in maybe stronger than people were anticipating. With something good for the watch list. What are some other strong shoes in the market? CAVA Mediterranean Grill. Pull back to its 50-day moving average and bounce. Got support from institutional managers. Here would be the oscillating box area. And it looks like it's probably broken out last week, although earnings, not that big of a deal, not for 24 days, but some of the positive. Texas Roadhouse did well on their earnings. Chipotle did well. And a few other earnings that came out supported that CAVA is going to do well. So that's why they are moving in a positive direction. Some former leaders will have to wait and see. I do have a position at like around 71 here. It is moving up here, but some of the negative things, we got this 50-day moving average up here. This maybe towards the bottom of that gap up. We'll see if it can oscillate back up to here. See what this 50-day moving average is going to do to it. Health Beauty had a big sell-off on, I believe it was Ulta Beauty, which sells its cosmetics. And Ulta Beauty said they had soft sales in the first quarter, kind of rolled over. And then we have the TikTok ban. Elf Beauty does a lot of marketing on TikTok, so people are worried of that as well. We did jump in with a position. It's a pretty aggressive position, and we'll just have to wait and see if it can get back up above its 50-day moving average. Earnings are in 18 days. So right now it's really fallen, fell below its 50-day, and it's just kind of bouncing right now. I think a breakout would be around 184. Maybe 186, something like that. I think still a good company, but just because it's a good company is not a good reason to invest in it. You want it to be a good stock. So there's a difference between that. Look at a couple other issues. Tesla moved higher. And like we like to say, if anything undercuts a gap up, should be a sell. Hasn't been able to get back above that gap up day. And a lot of the news coming out of Tesla has been less than stellar since then. So that's a story there. Meta, I think, is starting to work on a base. Fell way down here on its earnings and then bounced back. The good thing right here is breaking out of these lower levels that we had over here on the sell-off. So we'll see if it can fill this gap. This is really a breakout below these lower levels. Let's move the chart down. Seems to be some nice blue bars in here, but it'll need to continue a little bit. Wouldn't rush into buy Tesla at this moment. In the biotech area, Amgen kind of blew away with their numbers, everybody. So it's a gap up here. I would just wait to see if it can hold this gap up for the next week, or with the market facing below the 21-day and the 50-day if it gets turned away. But it was up almost 12% on Friday. So that is our show for this weekend update. Can't think, oh, there was one other one I wanted to take a look at. Semiconductor area. Right in this area, we did get out of it with the downturn in the market, but this would have been the place to buy. It's pulling back to this line here. It's kind of volatile, as most IPOs are. I may put on an option, pulls back anymore. See what other GCT is another stock that is highly volatile. Look at this. It looks like it's going to move higher, and then it really sells off, falls to the 50-day, and then it bounces up here close to the 20-day, moves up, and just sinks again up here, sinks all the way down here, and then it breaks out again, and then falls. So you have to have a pretty strong heart to stay in this one. Looks like it's trying to build this box area. It's in the upper range of the box right now in the middle after falling down to 25.12. So that might be something you want to put on your watch list. So this has been Mornings with Michael for information and educational purposes only. It's your responsibility to do your own due diligence to find out what is right for you and your portfolio, how much risk you can take, and how long span that you can leave your money in the market. If you want to learn anything more, feel free to send us a comment. We love hearing your comments. Hope everybody has a great weekend, and let's turn this thing around. Let's keep working on our goals and our activities, and really make it good for everyone. Have a great day.